Welcome to your Ethereum News Roundup. Here's your latest for Wednesday, June 25th, 2025. Bit Digital shifts its focus to Ethereum staking, FX Protocol introduces S positions, and the FHFA directs Fannie Mae and Freddie Mac to consider crypto assets. All this and more starts right now. Bit Digital Inc. announced a strategic shift to focus exclusively on Ethereum staking and treasury operations, transitioning away from Bitcoin mining. The Nasdaq-listed company is now positioning itself as a pure-play Ethereum native platform focused on staking and treasury management. The company has accumulated ETH since 2022 and holds over 24,000 Ether, worth approximately $44.6 million. Bit Digital plans to gradually convert its remaining Bitcoin holdings into Ether. To support the transition, the company has begun exploring strategic alternatives for its Bitcoin mining business, with proceeds redirected into ETH. FX Protocol introduced version 2.1 with S positions, a new way to take fixed leverage short positions with minimal liquidation risk, a liquidation break, and zero funding costs under normal conditions. S positions are the short counterpart to leveraged long positions X positions and are executed and settled in a single atomic transaction. The implementation works by flash borrowing a token, selling it for FXUSD on an AMM, using the total FXUSD as collateral, then borrowing the shorted token from the protocol's long reserve and repaying the flash loan. The launch completes FX Protocol's offerings, combining its decentralized stablecoin FXUSD with both leveraged long X positions and short S positions. And lastly, the Federal Housing Finance Agency instructed Fannie Mae and Freddie Mac to begin considering cryptocurrency as a potential asset when assessing risk for single-family mortgage loans. As key players in the U.S. housing financial system, both enterprises are to develop methods for incorporating cryptocurrency as a reserve asset without requiring conversion to U.S. dollars. Initially, only cryptocurrencies that are verifiable and held on U.S. regulated exchanges will be considered. The enterprises must also conduct comprehensive risk assessments that address market volatility and liquidity. The order was signed by William J. Poltz, director of FHFA, and is effective immediately. This has been a roundup of today's top news stories in Ethereum. You can support this podcast by subscribing and following us at ETH Daily. Also subscribe to our newsletter at ethdaily.io. Thanks for listening. We'll see you tomorrow.